Hi, welcome to the marketplace. Coming up this afternoon, government defrays half of its 5 billion cedi debt owed the Social Security and National Insurance Trust in the form of bonds. Also coming up, supervisory institution of rural and community banks, ARB Apex Bank, warns of negative impact of domestic debt exchange program and funds locked up with Securities and Exchange Commission. Plus, the Bank of Ghana touts Ghana gold coin as stabilizing tool for inflation control. We hear from the Bank of Ghana advisor, Dr. Civil Pata.
We try to mop up all the cedis we've given to buy gold. So we are very aggressive on taking that cedis back. We have instruments to do that. If it is our view that there's excessive cedis, that will cause inflation to get out of control.
My name is Darryl Kwao. Thanks for being with us this afternoon. Details coming up. All right, and we begin with a look at the currency market as we head into the weekend. This afternoon, if you head to the Forex bureaus, the dollar buying rate for the dollar, 16 cedis 25 pesos, selling at 16 cedis 50 pesos. The pound, 21 cedis 10 pesos. If you're buying, it's selling at 21.50 cedis. The euro, 17.65 pesos, the buying rate, and 18 cedis 10 pesos as the selling rate. And those are the rates at the Forex bureaus as we have it. First up, this afternoon, government has defrayed approximately 2.5 billion cedis of its 5 billion cedi debt owed the Social Security and National Insurance Trust SSNIT in the form of bonds. This was revealed by the Director General of the Trust, Kofi Osafo-Marfo, who says the payment followed a series of negotiations with government in a bid to thrust the scheme into a strong financial position. Here's more in this report.
As of December 2021, SSNIT records showed a total debt of 9.3 billion cedis, with a substantial 6.9 billion cedis owed by the government. The staggering figure represents about 75% of SSNIT's overall indebtedness, including overdue contributions and accrued interest charges. A significant debt owed by the government places Ghana's pension fund in a delicate position, resulting in an annual decrease of 1.3% in SSNIT investment returns. By speaking at a stakeholder meeting with pensioners, Director General of SSNIT said the government has defrayed about 2.5 billion cedis of the debts.
The government essentially owes SSNIT, and this is not a new thing. It's probably spanned way over about 10 years or so, much more than that. And over time and continuously, indeed, we have to sit down with the government and negotiate with them. And what we've had recently is that we've had some successes with that. And the government most recently defrayed 2.5 billion of the arrears in the form of bonds, 2.5 billion approximately. And that again does help the underlying position of the trust. So that really is the position with that.
The trust is on a positive trajectory after making a net surplus of 864 million cedis in 2023 from an initial deficit in 2021. Mr. Osafo-Marfo explains the trust anticipates similar results by the end of year.
If you look at 2022, you look at 2023, you'd see there's an underlying improvement in the net surplus. And it goes from a deficit of 300 million through to you're talking about a net surplus of about 865 million. In 2024, we are also looking at an improving net surplus. So if you look at the net contributions, we are striving very hard to improve that. And indeed, the figures show that we are improving that. If you look at our net investment income, again, that we are working on that very hard. It's improving as well. Then the other thing that we have to do is that we have to manage the business better. So we are managing the costs better as well.
Chief Actuary Joseph Poku says the trust is working to ensure more contributions are generated to run the scheme in perpetuity.
I can tell you that we are doing everything that we are supposed to do to make sure that we bring in new funds. If you have excess funds after paying the benefits, we put them in investments, and we make sure that we manage those investments prudently, to get more returns to come and add to the funds that is coming in. And we use that to pay the pensions that we are supposed to pay.
Ashanti Regional Chair of the Pensioners Association, Adakwa Tofo, emphasized on strengthening, safeguarding and improving the scheme.
SSNIT have been and continue to be a lifeline of thousands of Ghanaians. We must therefore safeguard it, strengthen it, and improve it. We must recognize and appreciate its value.
For Joy News, my name is Emmanuel Bright-Kweku.
Now, the supervisory institution for the rural and community banks, ARB Apex Bank, has lamented the negative impact of the domestic debt exchange program and has locked up funds with the Securities and Exchange Commission. Speaking at the 23rd Annual National ARB Chief Executive Officers Conference in Ho, the Managing Director of the bank, Alex Kwesiewa, said the events coupled with the COVID-19 pandemic are affecting the effective operations of rural and community banks. He therefore is requesting the government to release the funds to enhance the operations of the banks.
Though the rural and community banks, RCBs, recorded significant strides with the aid of digitization within the year in review, there were some setbacks. Addressing the conference, the managing director of the ARB Apex Bank, Alex Kwesiewa, said the bank exchanging 1.20 billion Ghana cedis in the domestic debt exchange program and having 350 million Ghana cedis locked up with the security and exchange regulated companies has impeded operations of the RCBs.
They constitute a major drawback to the big potential of the rural banking sector in our efforts at expanding the frontiers of financial intermediation, deepening financial inclusion, and offering maximum support to the economic growth agenda of the country. And so we would plead that our Deputy Director from the Financial Sector Division, Minister of Finance, you would take special note of these matters, and then especially ensuring that we get the monies released to our banks.
The chairman of the board of directors of the ARB Apex Bank, Dr. Anthony Obin, implored the government to deploy the Assembly's Common Fund through the RCBs.
I am appealing through our seniors here that government should consider rural banks, strong rural banks, to handle government funds, because the capacity of the rural banks, thanks to good governance, is much, much better than they found it when they made the laws that restricted the funds to only some commercial banks. So I think it's very important. We need that, and we know the terrain very well. Therefore, when we have the funds, we are better able to handle that.
The head of the other financial institution supervision department of the Bank of Ghana, Yao Sapon, who delivered a speech on behalf of the second governor of the Bank of Ghana, urged the RCBs to help attain the target of the Ghana Financial Inclusion Development Strategy.
The Ghana Financial Inclusion Development Strategy sets an ambitious target to reach 85% financial inclusion by 2023. While we have made significant progress, rural areas remain less penetrated by financial services. This is where RCBs can play an indispensable role in bridging the gap and delivering tailored financial products and services to rural populations.
It was announced that the RCB mobile banking app, which had recorded over 700,000 transactions with a total value of 323 million Ghana cedis in the pilot phase, would soon be deployed. Fred Kwame Asari, Joy News, Ho.
Now, an advisor at the Bank of Ghana, Dr. Sivo Pata, has described the Ghana Gold Coin Investment Initiative as a complementary tool to support the nation's inflation targeting policy. According to him, the initiative offers a more stable investment option compared to purchasing dollars from the forex market. He shared these insights on Beyond the Numbers, which airs tonight at 5:30 on the Joy News channel with Winston Taki and Isaac Kofieje.
Should be willing to buy it and sell it to the next customer, right? If the bank, for some reason, doesn't want to buy it, say maybe they don't have enough CDs or whatever, the central bank is guaranteeing that we'll buy the gold back and then we'll sell it. So we are guaranteeing the issuance of the coin. We are not guaranteeing the value, but we are guaranteeing liquidity that will stand behind the product. Okay.
Yes.
Right? So that's what we expect to happen. You keep this gold coin, unless you are really broke and you want to. Some coin is what, 2,700. If you have about 10 of those coins and you pass on to your child or something, that's a nice investment to have. So our strategy is that we try to mop up all the cedis we've given to buy gold. So we are very aggressive on taking that cedis back. We have instruments to do that. We have Bank of Ghana bills. We call it open market operations. So every week we go out there to take cedis from the system if it is our view that there's excessive cedis that will cause inflation to get out of control. So we're going to continue to do that. It's not just because we have a domestic gold purchase program, but as part of our mandate of price stability, we have a tool to mop liquidity.
But you just cut your attractive rate of 29 to 27. How sure are you that you still have that strength to mop up the cedis?
How we do? You see, in determining how attractive interest rates are in a regime, what matters is the real rates. Okay, so you are right. We've reduced the rates from 27% to 29% to 27%. But inflation has also come down. So if you look at I think inflation just went up a little bit, 21.4. So if you look at the real rates we are offering in our space, it's about what, 6%?
Yeah.
Okay, that's very high. You don't get that in many markets. Actually, if you comb through Africa, you may not even find real rates of 6%. So we believe that if you still invest even in our open market operations or you invest in the T-bill markets, you are being offered rates that are real compared to, positive real rates compared to where inflation is.
Well, be sure to catch the full conversation on Beyond the Numbers as at 5:30 tonight on the Joy News channel with Winston Taki and Isaac Kofieje. Now, as part of moves to promote business ethics on the African continent, Absa Bank is collaborating with the Business Ethics Network of Africa to host the BEN Africa Conference in Ghana this year with the Ghana Communications Technology University. Judith Hazel, Director of Compliance at Absa Bank Ghana, explains that this will position the bank as champion of ethical business practices. She has been speaking to journalists after announcing the partnership in Accra.
The ethics-focused conference, which originated at Nelson Mandela University Business School in South Africa, gathers leaders and stakeholders from the private, public, and non-profit sectors to promote ethical decision-making in business practices across Africa. Absa's partner with the BEN Africa Conference reinforce its position as a champion of ethical business practices. Speaking at a short ceremony to announce the partnership, Director of Compliance at Absa Bank believes this is an opportunity to promote integrity in business operations.
It gives us the opportunity to actively participate in promoting ethics, that is integrity and transparency across businesses and indeed across the entire continent. The message to leaders is to foster an environment where doing what is right is important over and above compliance with rules and regulations.
Dean of the Ghana Communications Technology University, Professor George Opona PJ, has been explaining the importance of such a conference in Ghana.
Even in our African context, you can see that we have a lot of issues that we are confronted with. Peace, justice, the rule of law, poverty, they are all inclusive. And for that matter, the AU, that is African Union, sort of broaden the perspectives of our sustainability to include all these relevant issues in the African context. And so issues of inclusivity, issues of rule of law, justice, peace, are all included and relevant in our ethics. So that is how come this African Union agenda is very critical for African content. So these are the areas, supply chain, when you talk of business ethics, supply chains comes into fore because it is within the chain of our business that the ethical issues permeate. And for that matter, in the conference, that will also feature a lot.
The conference is slated for November 7th this year in Accra.
Now, EU Ambassador to Ghana, Echad Rosali, has stressed the need to improve the competitiveness of Ghanaian exports through enhanced value addition. According to him, this will aid in increasing access to regional and international markets. He spoke to Joy Business at a United Nations Industrial Development Organization, an EU-funded project dubbed West Africa Competitiveness Program.
The West Africa Competitiveness Program aims to promote regional economic integration and highlight the EU's commitment to the Economic Partnership Agreement with West Africa. Echad Rosali said the EU is bent on addressing difficulties with establishing effective processes and quality systems for businesses.
The area is to support the productivity of the SMEs, and it comes with, you have to mobilize money to support that with machinery, training, practices, natural fertilizers, so on and so forth. Certifications for the Food and Drug Authority and all the certification for export. You cannot just wake up in the morning and say, oh, I have a fig tree and I will want to export it. It doesn't work like that. It comes with a long chain of certification and improvement of your practices. So this is what it's meant of.
Chief Technical Advisor of WACOM, Charles Kwamisaki, recounted the various trainings since the collaborative efforts between the EU and WACOM while stressing the importance of the formulation training.
Industry. We've worked on 3 main value chains. We've worked on cassava and its derivatives, tropical fruits, mainly mango and pineapples, and then we've also worked on cassava and its derivatives. Over the past 5 years, we've worked across the country. We've worked with the 5 C's of competitiveness, trying to support various SMEs to enhance their competitiveness in terms of production, quality, and market access. That's what we've been doing.
The program since 2019 has improved the competitiveness of Ghanaian exports in 3 main value chains: cassava fruit, cosmetics, and personal care products.
Now, as part of activities to mark Breast Cancer Month, leading cybersecurity and security gadget company Virtual Africa Group has donated 100,000 cedis to Breast Care International towards the construction of a Otumfuo Setutu, the 2nd Comprehensive Cancer Center of Excellence. Esther Wajiwa, a Deputy Sales and Marketing Manager of the group, explained that the move is part of the company's commitment to supporting worthy causes in society.
The center, named after Otumfuo Setutu II, will be the first standalone comprehensive cancer center in Africa. The center will offer innovative diagnostics, cutting-edge radiotherapy, as well as research and training. The initiative will also develop advanced treatments using artificial intelligence to improve outcomes for breast cancer and other cancer patients worldwide. As part of activities to mark Breast Cancer Month, Virtual Africa Group donated an amount of 100,000 cedis to Breast Care International, the organization championing the cause. Speaking to Joy Business, Esther Wajiwa, Deputy Marketing Manager at the company, explained that the donation forms part of the company's corporate social responsibility.
Virtual Africa Group, that is the 2 companies, Virtual Security Africa and Virtual InfoSec Africa, we are coming up to give 100,000 Ghana cedis to support this project. We decided to hop on to this. It's a good cause and help them with the establishment of their comprehensive cancer center. We believe that it will go a long way to help in the fight of breast cancer and other cancers as well. We are going to benefit as a whole, as a nation. Our generations to come are also going to benefit. So we are in a way giving back to society, helping the country with the fight against breast cancer and other cancers as well.
Dr. Beatrice Wiafiadai, founder of Breast Care International, shared the inspiration behind the initiative. She noted that the $100 million project, when completed, will make Ghana the center of excellence for cancer research and treatment in Africa.
The entire project cost $100 million, but the first phase is going to cost us $10 million. It's going to include prevention, awareness creation, screening, diagnostics, everything that is done around cancers, so that we will have more cancer survivors. The fact that one has been diagnosed with cancer doesn't mean the person is going to die. But because our people come late, that's why we have very high mortality rates. So this center is going to help us to change the narrative about cancers in Ghana and in Africa.
She was full of praise for Virtual Africa Group for the donation.
I just want to say, may God bless them. Virtual Security, Mr. Asidu, is my younger brother. And I was not surprised that he came to support. So if you are listening, if you are watching us, don't think that you need to bring 1 million before you can contribute. Even if it's 10 cedis, if it's 5 cedis, if every Ghanaian will contribute something, it will help us to finish this project.
The first phase of the project, which is expected to be completed in 2027, is spearheaded by Breast Care International in collaboration with Peace and Love Hospital, Global Health Catalyst, and Otumfuo Setu II Foundation.
All right, you're watching The Marketplace. Time now for show business. So, Vice President Dr. Mahmoud Bawumia recently announced that Ghana will launch its first local music and movie streaming platform in November, that's next month, aiming to provide better financial rewards for Ghanaian creators. While the announcement is exciting, it has raised several questions regarding its feasibility, potential bottlenecks, and whether it can avoid becoming yet another unfulfilled government promise. While culture journalist Kenneth Aku will be joining me with some analysis here, but we want to first listen to Dr. Bawumia, what he had to say when he met stakeholders this week.
For music. So all the streaming platforms like Spotify and so on are all externally owned. And so when we put our music on those platforms, it's not surprising that the returns in terms of the payments that are made to our musicians are very little. Very little. And they are not much to write home about in general. And so the issue for us of making sure we have a streaming platform locally for music and put in all the catalogs from A to Z that we can find in Ghana on the platforms. That has been something that it has needed to be done for a long time.
So that was the Vice President there. Culture journalist Kenneth Aku has been gauging reactions to this. He's in studio with me to discuss. So what are people saying about the feasibility of this plan announced by the Vice President there?
So since this announcement was made some days ago, there has been varying reactions across stakeholders and experts in the creative space. Mm-hmm. As to its feasibility, it is something that people have said that it's very possible to organize or create a platform such as this for music.
Like a good idea.
Yes, like a good idea, basically, because there's already been talk and there's been frustrations among creative, producers in Ghana considering how much they are able to retain from these platforms that already exist. And for instance, Apple Music, YouTube, Netflix, Spotify, all of these platforms are churning out one more mode of, product or the other on behalf of these artists. And what the frustrations has been about mostly, the revenue that is generating from these platforms. And so that is one thing. For each reason, people feel like it's a good step that has been taken. But another thing that has been, dominating discussions is whether or not this platform that the Vice President is talking about will be able to compete effectively on the market, considering the challenges that are already belittling, confronting the creative space in terms of migrating their content onto digital spaces and dominating the market as a whole.
Yeah, I mean, it sounds like a good idea, and we have to begin from somewhere. So, I mean, what are the bottlenecks that people are talking about that need addressing?
So I was having a conversation with an executive of one of the major streaming giants across the world who are in Ghana right now. Mm-hmm. And one of the issues that they came up with was about an existing framework, for which reason there are some challenges when it comes to promoting the content of Ghanaian origin onto projecting them onto the world at large, or in Africa at large. Because if you look at, you compare Ghana's creative space to that of Nigeria and South Africa. South Africa is known to have a lot of, hold when it comes to like the framework through which some of these contents can be churned out and made into revenue and sent back to the creators of this product. When it goes to Nigeria, there is the numbers. That's the argument that's usually being made, that Nigeria has the numbers to push these content when it comes out. And so generating revenue from that for the artist or for the movie producer is also quite possible. But Ghana is lacking in terms of infrastructure and when it comes to the numbers as well. So people are looking at how the vice president is going to look at, surmount some of these challenges. There's also the issue of data, for these, creative works. There's also the lack of partnership between, for instance, private sector, because some people are saying that if this is a good initiative, but it would be better led by the private sector because they have the wherewithal to be able to do some of these things because they have, institutional memory and, lessons from other areas where similar platforms have been created.
Yeah, I mean, you mentioned South Africa. I remember I read an article this week that said more people there are turning to streaming services for entertainment, not a paid satellite TV. Yeah. And so, as the government thinks about this, what can they do to ensure this doesn't become an unfulfilled promise?
First of all, a heavy involvement of the private sector will be something that will yield a lot of benefits for this particular mission because as we know, governments come and governments go, depending on how the elections turn out, what is going to happen to this promise, because we've seen other, political statements being made, and then when, the party is giving the political power, we see that usually the implementation of that promise becomes a problem. But if you are looking at an issue such as creating a digital platform for creative works, you need a very sustainable way of keeping it running. And so the changes in government, if it becomes the case, will also very much affect these things. So the issue of continuity is one big thing that the private sector or the stakeholders are talking about, and the fact that private sector and partnerships to be with in terms of such as like telcos and all of those stakeholders, because data or internet is a very instrumental part when it comes to seeing the realization of some of these products. And so these are basically some of the issues that the industry stakeholders are talking about.
You make an important point about continuity. I mean, we have just a few days election, 50 days, and you're wondering if the MPP government doesn't win, what becomes of this initiative.
Exactly.
Thank you so much, Kenneth Aku, country journalist. myjoyonline.com, yes. And more news on our website, myjoyonline.com/business. More from yesterday's conversation, PM Express Business Edition. Business is still reeling from DDEP, not yet turned the corner. That's according to Nana Osebon. So you can read on our website, myjoyonline.com/business. My name is Darryl Kwao. Thanks for watching. We will be back same time next week.